All right, let's talk Reddit. For the longest time, it was just the internet's front page, right? A place for memes, niche communities, kind of quirky. But lately, the financial numbers are telling a whole different story. So today, we're going to dig into Reddit's performance and really break down the investment case for this social media giant.
And that really is the million-dollar question for anyone looking at the stock, isn't it? Has Reddit finally made the leap from just a cool platform for memes to a serious, high-growth, profitable company with a real future? Let's dive into the data and see what it tells us.
Okay, let's just get right to it. The whole bullish thesis for Reddit, the reason people are getting excited, really boils down to two main things. First, you've got this super powerful, high-margin ad business that's just taking off. And second, there's this incredible, almost irreplaceable asset, all of that user-generated data, which, as you know, is basically gold for training AI.
So let's tackle that first piece, the ad platform. And make no mistake, this isn't some side hustle for Reddit. This is the core engine. It's the absolute foundation of how they make money right now.
And wow, this chart just lays it all out, doesn't it? A whopping 93% of all their revenue in Q2 2025 came straight from ads. Everything else? Yeah, even that hot AI data business we hear so much about, that's all crammed into the other 7%. So you can see just how much the health of this company depends on that ad business firing on all cylinders.
So the big question is it firing on all cylinders? Yeah. Big time. That ad revenue didn't just grow, it exploded. We're talking 84% growth year over year. For a company of Reddit's size, that's just insane. That's the kind of number that makes everyone on Wall Street stop and pay attention.
So how are they doing it? Well, it's not just about getting more people to sign up. It's about getting better at making money from the users they already have. And that's where this number comes in, $4.53. That's their average revenue per user, or ARPU, and it jumped 47% in a year. That's huge. It shows they're getting way better at turning clicks and comments into actual cash.
And a big part of that is just smarter tech. Take their dynamic product ads, for instance. They're literally twice as effective at getting users to actually buy something compared to their regular ads. And that's a super important point, right? It means their growth isn't just about shoving more ads in front of you. It's about using better technology to make the ads actually work for the advertisers.
Okay, so that's the advertising engine. Now let's shift gears to that second pillar of the investment thesis. It's a much newer part of the story, but it could be absolutely massive for Reddit's future. And that's its data and its role in AI.
Yeah, look at this description. The world's largest high-quality, authentic human dialogue corpus. That's a fancy way of saying something really simple. If you're building an AI, you need to feed it real human conversations. It's the fuel. And Reddit, well, it's sitting on one of the biggest, richest fuel deposits on the entire planet. And look, this isn't just some idea on a whiteboard. They're already cashing in. Reddit has locked in major, long-term licensing deals with the biggest players in the game. We're talking Google, OpenAI. They're paying Reddit for access to this data to make their AI models smarter. Okay, so let's be clear. Compared to advertising, this is still a smaller piece of the pie. It brought in $35 million in Q2, but it's growing at a solid 24% year over year. And here's the kicker. The profit margins on this are incredibly high. Plus, it's a super stable, predictable source of income that doesn't care if the ad market is having a good or bad month.
All right, so you've got two powerful growth stories here, booming ads and high-margin data. But what does that actually do for the company's overall financials? Let's take a look at the bottom line.
And yeah, the Q2 results were just impressive, plain and simple. Total revenue shot up 78% to almost $500 million. That gross margin, 90.8%. That's incredible. It means for every dollar they bring in, almost 91 cents is gross profit. On top of that, they're actually profitable on a GAAP basis and delivered really strong adjusted EBITDA.
And I want to pause on this for a second, because it's a huge deal. Being GAAP profitable for 4 quarters in a row, that's a massive milestone. It tells investors that this isn't just some flash-in-the-pan growth story. The business model is fundamentally sound and sustainable. And by the way, that's also a key hurdle you have to clear to even be considered for the S&P 500.
And it's not slowing down either. When they gave their forecast, their guidance for the next quarter, it blew past what analysts were expecting. They're projecting even more growth in adjusted EBITDA. When a company does that, it's basically telling the market, we're confident. We know what we're doing and it's working.
Okay, so fantastic growth story. Check. Solid financials. Check. But, and you knew there had to be a but, this all leads to the one big question every investor has to ask. What about the price? Is the stock too expensive? Because, these kinds of exciting growth companies,
they don't usually come cheap.
And Reddit is no exception. If you look at its forward PE ratio, it's trading at around 60 times earnings. Now, to put that in perspective, competitors like Meta or Pinterest are down in the 20s. So you're paying a serious premium for Reddit stock. The question is it worth it?
Well, to help answer that, we can look at a handy little metric called the PEG ratio. What it does is pretty simple. It takes that high PE ratio and balances it against how fast the company is actually growing its earnings. The whole idea is that, hey, maybe a high price is okay if the growth is high enough to justify it.
And that's precisely the argument for Reddit. When you run the numbers, its PEG ratio lands somewhere between 1.2 and 1.5. Now, a PEG ratio around 1 is often seen as a pretty fair price for a growth stock. So what this tells us is that while that PE ratio looks scary high on its own, once you factor in the incredible growth, the valuation starts to look a lot more reasonable.
And it's so important to remember that all of this is built on a really, really strong business model. Reddit is what we call asset light. They don't need a ton of factories or physical stuff. They have those incredible 90% gross margins. They barely spend anything on big capital projects, which lets them turn all that revenue into pure cash flow. We're talking over $111 million in cash from operations in just one quarter.
You know, this quote really ties it all together nicely. The idea here is that Reddit is a pretty rare beast. You've got this powerful community that acts like a moat, protecting it from competitors, and now you finally have this powerful way to make money from it. That combination makes it a really interesting name to watch, especially if the market takes a dip and creates a better entry point.
And that really leaves us with the final, critical question. All the data we've looked at points to a fantastic story, right? You have high growth, real profits, and this unique angle on the whole AI revolution. But it all comes at a premium price. So the dilemma for any investor is simple, but it's not easy. When is the right time to buy in? And that's the big question to chew on. Thanks for tuning in.